Hi, this is Randy Finney with Red Side of the Chart, and this is a mid-session update for Tuesday, March 3rd, 2026. It is 1:11 p.m. Eastern Time, so I'm starting the video. I don't have a lot of new developments or items to cover or any change in my outlook. So I'm going to do just kind of a quick recap of what I'm watching, what my thoughts are right now in the market, key levels to watch, and potential developments to watch for. We're, once again testing the bottom of that trading range, that multi-month trading range. That's this purple box I have here on QQQ, a trading range that I expect will be taken out, most likely sooner than later. And you have the 200-day simple and exponential moving averages just below. And then that should take us down, I believe, if and when that sell signal occurs, in relatively quick order down to T2, which from where we're at right now is about approximately 6% lower. And then, as I like to say, support is support until unless broken. You know me, I can, it's kind of like the debate team. I was never on the debate team in high school or college, but I know kind of what it is. I think they give, they pick a topic and each side gets to have an argument. So if I wanted to sit here for an hour and talk about the bullish cases, or the bullish case, reasons to go long and be bullish in market, I could certainly do that. Now, I'll throw a few things out because remember, what my job is, I provide technical analysis and I provide trade ideas, and I go so far as to share my view on where my positioning is, where I think things are going to go. But the only guarantee I ever give is that I'm going to be wrong. I'll be wrong a lot. So with that same analysis that I give you, if you have to take the other side of any trade, be it a commodity, treasury bonds, a stock market, a particular stock, where I believe my skill sets lie, one of those is identifying key support and resistance levels that are likely to trigger reactions. In other words, if it's a support level that breaks down, or one that I expect to break, then that would provide, the next objective short entry on the NASDAQ 100, take us down to my second target. Likewise, as I like to say, support is support until unless broken. I've been harping on it since that low was put in all the way back on October 10th, saying that was a key low in the S&P 500 and QQQ, and that since then and has gone on to define the bottom of that trading range. It was our first target. Once we had it as a key reaction low, it was the first price target on a swing trade with multiple short entries here. And this is just one long, longer than expected. If T2, assuming T2 is hit, it's going to be a little bit longer. But again, not too much. All the initial short entries were in this. I think right there was the first one, and I highlighted the breakdown back test there. We go off the 60-minute chart, so multiple entries. And again, so from the average entry price, it's going to be a drop of about 10-11%. And we're talking, again, a lot longer than those swing trades usually take to play out, because this is an unusually long sideways trading range in the market. But again, if you annualize that out, that's still a decent return. And again, this is just one of many trades. Unless you're new to the site, we've been hitting a lot of triples and home runs and even grand slams on individual stock picking. That's where the bread and butter has been within this trading range. Investors in index funds, even the NASDAQ 100, are going absolutely nowhere for months now. A little up, a little down, back to where they started. Again, QQQ is trading today where it was back in the beginning of September, right here in the beginning of that trading range. So you can see there's a zero return there. But yet there's been a tremendous amount of opportunities, profitable trades on individual stocks, sectors, commodities, bonds, crypto, you name it, within that range. Okay, so that's it, guys. We're at support. And where I was going with that, if you're a glass half full guy or gal right now, you think the market's going to post some nice gains in 2026 and in the coming months, then all I can tell you is this is one of the best long entry points you've had in a long time. We've had many tags of the bottom of that trading range and those key October 10th lows since it was put in, but none of those coincided with a tag of the 200-day moving averages. As I've been talking about for many months now, The major stocks, the major stock indexes like the S&P 500, the NASDAQ 100, they periodically come in, even in the strongest of bull trends. They get too far away for too long from their 200-day moving averages, and they come back in to check those. It's kind of just like a, hey, you still there, kind of mean reversion thing. And so, again, that's it. So if you see things half full, if you don't buy today, where do you buy? This is, again, the first test of the 200-day moving averages since they were recovered back here after that bearish trend where they were lost. And again, I've covered that many times in the past. So kind of a recap. And I would just say, if you're new to the site, just go back to the last couple weeks, as long as you want, and look at the videos with coverage of the broad market. I've covered in detail how the market tends to act when it pulls back to the 200-day moving averages. All right, so not much else to add. Oh, and then the other thing I want to add on it as well is, it's this little, the 5-minute chart I gave you yesterday. It looks like an irregular EKG. And this is just the 5-minute chart goes back to the beginning of February. So we're only looking about a month of trading history here. But this is where, even in the indexes, I just said investors are going nowhere, spinning their wheels, hadn't made a nickel since the beginning of September if you've held on to the NASDAQ 100, QQQ or NQ. But yet, as a swing trader, this is extremely profitable. This range here that I just boxed in is about 4% almost from top to bottom. And yesterday, right there, give you an objective short. I did the video saying at this point in time, I strongly can feel that rallies back to resistance provide objective short entries. Again, and I have to speak broadly because everyone's positioned differently. Some of you don't short, don't want to short, only want longs. Use the same analysis in reverse. You buy pullbacks to these support levels. These were the targets I gave you yesterday. So that's where we shorted, right there at the highs of the day. And I gave you, they were dotted lines. I had hand drawn them in on the screen software, so I just added them here to price levels. So these we went down, hit that last one I had there. Anything much below that is going to take out the bottom of the trading range, the 589 level on QQQ in the 200 days. And then that's a much more significant technical event when it happens on the daily chart, especially a solid daily close below those levels, right? I think just a breakdown is going to do it, but either way. And where I'm going with this is there's plenty of money to be made for active traders. Like I said this morning, if you shorted there yesterday, we dropped almost 3% into this morning. You make 3% in a day. Let's just say you do that trade once a month. Annualize that out. 3 times 12, that's 36%. And again, not that it's always going to present itself, but in a volatile market, and that's what I wanted to get to here, try to segue into the VIX. So I've been harping on the VIX as being bullish on the VIX, bearish on the market, giving you multiple entry points. Every time the VIX has spiked in recent years, we were in right off those lows. I like these divergent lows. And again, like I say, it's easy to me. The VIX tracks, first of all, the S&P 500. So where the VIX just bottomed, with positive divergence at the recent lows, that's around the time the S&P 500 was hitting all-time highs, new highs with negative divergences. So they tend to work opposite. And, we've had plenty of opportunities. When this trend line started to develop here, I started highlighting pullbacks to this trend line as objective buying ops, including even the most recent one here. And where did we stop today? If let's say you took that short trade yesterday as an active trader today. These levels have not changed. I've been highlighting this as the next target, stating in recent videos that once we pop these two recent reaction highs, which is 23.19, it would take us up to the next targets that I had on the VIX. And this is a pretty big one. And you can see that's what we hit today, right up to around that 26.62 level. Now, this is the spot VIX. You can't buy this. You can only buy derivatives that track the VIX, and those are your VIX futures, the options on VIX futures, or any of the various ETFs or ETNs that track the VIX futures, right? And I just have to say, be careful with ETNs. A few years back, we had several. I think it was 2 that blew up in short order. We were actually long the VIX at that time, And I personally had one of those VIX ETNs, and I'm watching it in the day, and the VIX was just skyrocketing like this, and all of a sudden the ETN just stopped going up, and then it even started going down, and that it blew up. So again, I talk about that on the site. If you're not familiar with what an ETN is, the difference of an ETF, go to the resources tab here, and then go to frequently asked questions, and then type on right here ETF related questions, and then what is an ETF, what's an ETN. Basically, an ETN, for lack of a better word, it is completely different from an ETF. They look very similar, they feel similar, they work a lot the same, other than kicking out the K1s, which are paying the ass at tax time. But an ETN is an IOU. Basically, it's an instrument that is just a liability. A company puts it together, and they're using derivatives. Again, they're doing the same kind of things. They're buying futures or derivatives thereof to track an index, or they're usually in commodities and things like the VIX. And if it blows up, that company doesn't have to guarantee. In other words, the VIX can go up 200%, and if you're in a VIX ETN and it blows up, it's on you. The company can say, well, it exceeded, the move exceeded the hedging that we were using in place, the sophisticated strategies to track that. Again, it is unlikely, but it has happened before, and it could happen again. So just know that when markets get really volatile. And me personally, since then I've been trading futures, and including VIX futures. That's my kind of wheelhouse. So I'm going to use this chart because the ETNs will, even the VIX ETFs, they'll suffer over time from decay. This is the true VIX, and you can see it just behaves very well to the technical levels. So that was also, as an active trader, this morning when the market bottomed, the VIX hits not just a price target, one of my very significant price target. This is where we've stopped the last two times off this previous divergent low. So the odds for reaction there were very good. It was also, again, not by mere coincidence, coincide with the bottom of the trading range. Yes, that's the trading range on QQQ. I understand the VIX tracks the S&P 500, but remember, they have the same top holdings, and they are highly correlated. They move together. Not only that, I've given you the trading range in SPY, and that midpoint line, which is comparable to the bottom of the trading range in QQQ. And I've talked about this, again, ad nauseum lately. When you're in the top of the range, the midpoint delineation line acts as support. Typically, once you break that, you're going to go down. So again, my preferred scenario, and I've been saying the same thing for months, is that SPY will most likely, when QQQ breaks down, takes out the 200s, the S&P 500 will break the midpoint and go down, and then fall around to the bottom of its trading range. And that's when QQQ most likely will be coming in to hit T2. Buyers will step in because it will be for the S&P 500 the first time that it's come back and checked its 200 since it recovered them there, right? And I watch both of these, and I do that because there are different subsets of traders. For those that trade futures primarily, or like to just trade the markets or do it actively, especially times when it's conducive to trading the markets, you have really two subs and large caps, and those are the big ones. They're the most liquid. You have those folks that trade the S&P 500 or the ES futures or any of the smaller mini contracts, and those that like the NQs like me. You've heard me say this many times. The QQQ is going to go up and down with the S&P 500. It's just in a multiple thereof, and it's not a fixed formula, but it's about a 1.2 or so % beta, meaning typically moves up and down 20%. And again, it depends on conditions, what the financials are doing, because they really don't have a representation in the NASDAQ 100, and it's the second largest in the S&P, but that's that. So there's your kind of overview. And again, just where I started the video, if you are bullish, all I can tell you right now, if you don't buy here, where do you buy? That's the first. It's a pullback to the midpoint of the range, which is act as support. And as long as you're at the midpoint of the range, you buy pullbacks to support and you sell the top of the range. Pullbacks to support, you sell the top of the range. Pullbacks to support, you sell the top of the range. Pullbacks support, sell the top of the range, or set your stops a little shy. Once that breaks, if and when, we go here. Otherwise, they're going to come in, So far, they're buying QQQ off the bottom of its range today, and they're buying SPY off the bottom of its range. It had a brief undercut, gap down. Remember, when you have a gap, when the futures move big overnight, there's order imbalances. So you tend to see that. And so far, they've come in on both QQQ and SPY. We had a little dip after the open, troughed about 10:30 this morning. This is a 1-minute chart. And since then, it's been reversing. And again, so you have to have a trading plan. If you don't know what to do, best thing to do is sit out, watch, learn, paper trade. But if you are bullish, that's what you can buy pullbacks. If we break this level and you go to the 200s, you'll have your first opportunity to buy the a pullback to the 200s since they were first recovered. Oh, after we recovered it right there, we pulled back and kissed the 200 simple there. There was a near pullback. I think on intraday, after hours of pre-market, we had a perfect tag of it. I think there, kiss the 200s there. You get it. So it's pretty easy stuff, guys. It's about as easy as it gets for the market. And let me again speak to those who might be frustrated with their trading, especially if they're not going with the individual stocks, in sectors that we're trading and making the easy money on. Again, if you're frustrated on trading, if you're only trading the stock market, meaning the index ETFs, you've gone nowhere as well. The S&P 500 today, if I put my crosshairs on it and I move back, it's trading exactly where it was back in the beginning of October right now. So you've had a zero return, flat on the indexes. It's a swing or trend trade or investment. Okay, so in a nutshell, if we rally here, the VIX, remember today, hit resistance at the highs. That's your next resistance on the S&P. You break that, you're going to have a new high. That'll bring in a lot of stops. Will be hit on short sellers, and it'll probably give us a back test of the trend line, then fail. We have big negative divergence. Oh, these trend indicators, again, like I said in the beginning of the video, I can sit here and make a bullish case that PPO, when it's above not the zero line, I have my delineation line here set at about negative 0.64. I might even move that up a little right here, give or take. You can see what I'm talking about here is the PPO signal line. It's 9 EMA. That's the white line. It's the last of the two to cross. Typically, when you're above this negative, it's about negative 0.5. I had it at negative 0.6. You're in a bullish trend. You want to be long and strong, right? It's a trend indicator. Once you cross that, it's bearish. And that was the biggest correction in years right there. And you've been above it. So from this point of view, that's still bullish, I'm sorry. However, the negative divergences tell me that everything I'm looking at is likely to happen soon. We'll break, then we'll cross below there. So if and when the PPO signal line, again, the white line, which is the last of the two to cross, is clearly below there, it will signal that we're now most likely in either a solid correction mode or in an outright bear trend, right? New bear market. So, and again, I could sit here all day long. I have a lot of trend indicators. I have numerous trend indicators. Most of them I'm not even covering all the time. Most of the long-term trend indicators are still bullish. Some of the shorter term to intermediate flip bearish. And again, it depends which chart, which index I'm looking at. It's kind of a mixed bag. And that's what you're going to get when the market's in this trading range. To keep it very simple, a solid and sustained upside break. Anything but again, I bet that if we break out, it will fail. But if it's solid and sustained and QQQ makes new highs, and that's nothing but bullish, right? And if we break to the downside, that's going to be bearish. And then I will turn my focus, which I'm still, keep an eye on the longer term targets. These are my long-term targets for the S&P 500. We already hit 3 of them last year. We made a marginal new and still divergent high. And these are the targets I expect likely to be hit this year, if not this year, next year. But I doubt the market's going to move sideways for, the remainder of the year. That would be an extremely unusual trading range. You can just take a look at, the stock market, QQQ. There are periods of consolidation, and we had one, last year. This one. But typically, you're either going up or down, right? And from these areas of consolidation, the longer they last, I always say it's like energy building like a coiled spring, the bigger the ensuing move once it breaks. So, all right, that's it, guys. And again, just kind of, for those of you perplexed how the futures were down so big and the recovery today, somebody made a comment and I replied to it as soon as I got back to my desk. We have contractors on the house doing a remodeling project. And as soon as I got that post out to you this morning, my doorbell rang. They were there and, had to go over, make some decisions on things. So putting in tile today, cabinets, all that kind of stuff, what goes where the handles go, all that stuff. So I'm sorry I wasn't around this morning, and I will catch up to any questions as soon as I can. In fact, I had a second set of contractors coming out, some guys doing some dock work on the back of the house. Okay, so I am back at my desk. That's it. What else I want to show you? Oh, I closed out a position today. One of those ag input stocks, which was, let me cue up the sector. AVD is one that broke out recently, but that breakout's failed since. This is one in the sector. It was NTR. That one. I told you in the last year or so, I had a lot of these in long-term accounts as core positions. CF is at T2 now, close enough. So I always say the price targets that I list and give you are the actual resistance levels where a reaction is likely. And the more obvious those levels are, traders like myself will step in early. So I just sold this one because it's close enough. We're at 108.64. It was up a little more earlier. So that was a final target. And this one, like all these guys, it comes back to here. I started getting bullish on these guys back in 2024. And I just wanted to point that out. That's a pretty decent resistance level. Longer term, I'm still liking the sector, I'll tell you. But I got a lot of these. I'm just going to run through them real quick. CTVA, the biggest in the group, put in another divergent high, last divergent high. Again, we got bullish on these guys back here in 2024, big divergent lows. And, they're boring fertilizer stocks and other agricultural inputs. So 88% blowing away the stock market and with a lot less risk. Plus, these guys, a lot of them pay dividends. But you can see here, this is a even bigger divergent high. So that's why I'm harvesting some profits today in the sector. There's a trend line. If and when that breaks, that's going to trigger a sell signal. Probably bring you back to this trend line and maybe a test of the 200s. NTR, that one already hit our final target. I gave you back here. Was off this divergent low, I believe. I gave you 1, 2, 3, 4, total of 5 targets. We hit all 5. So that was, I don't know, whatever. That trade's already closed out, 50% profit. But you can see I had additional lines, which were resistance levels on here, and it hit this one today, 76, or yesterday, 76.33. And if you look closely, you've got some negative divergences now. So there's another one, and it's still not far off that level. Time to at least, at minimum, raise stops to protect profits. There's an uptrend line. Gives a little wedge. If broken, it's going to probably bring these guys back in. And it meshes with, because I think we're on the verge of a true broad-based sell-off in the market so far. If you think the 3% drop today or whatever, that's nothing. That's just noise within a trading range. And again, guys, it's a function of the elevated VIX. If you're frustrated because you saw some nice short gains evaporate this morning, you're in the wrong game. You need A, learn patience, and B, learn that when the VIX is high, the VIX is the volatility index. It doesn't mean the market straight down index or the market straight up index. It means volatility. Volatility means ups and downs. So that's why you can ping pong, if you're an active trader off these levels. There's CF, T2 hit. Like I said, Mosaic, this one, over time, I think it'll still get up. This was I gave you 4 targets. 1, 2, and 3 were hit quickly off that divergent low. T4 zone still made a newer low. And, ultimately, I think we'll probably see these targets. But again, birds of a feather, guys. So this one already hit our 4th and final target quickly. Some of these, we hit and we closed out. They're just they're grouped together in the active trades because I covered these stocks in almost every instance in videos. So I tagged them all together. That means they're associated with those posts of the videos where I covered them. And I can't separate them. The tags, I can archive. I have to categorize a post as an active trade, a completed trade, and then all the ticker tags are in there together. There's SMG, Scott's Miracle Grow, Big basing pattern, really. So, longer term, if the market doesn't just fall apart, break out above this multi-year basing pattern would be quite bullish for Scott's Miracle-Gro SMG. FMC, this one just petered out, never even hit any of the targets, blew away any reasonable stop. It's not a healthy looking chart. UAN, there's IPI, Intrepid Potash. We hit 1, 2, 3, 4, fourth top of my fourth target zone, then pulled back, put in a divergent low, rallying again, and it's kissing that level again. Again, this was T4 zone. I gave that target to you back in 2024. We hit the top of it with negative divergence at the time. That's what sent us down here. Then we put in the divergent low, positive divergence. We kissed it again. What was that, yesterday? Look at that high of, I'm trying to get my crosshairs on it. High of 38.54 versus a 38.71. That's within basis points. And so you can see its resistance. And now we have negative divergence. So even if it pops above there, there's a decent chance that breakout may fail. So again, just kind of sharing my preference to me personally, just harvest some gains, especially on long positions, on a lot of longs, and recycle back in on a pullback. I think ultimately we'll probably get up here again, unless there's some hell of a bear market coming up, which is possible. We'll see. AVD broke out recently, had a bull flag, but that failed. We're back down below, but we're testing the 200-day moving average. This is still an active trade. We're still slightly down on that. These are the low price ones I said stay away from, because it's a penny stock, seed, Biox. They're around $1 a share. You know what I forgot to cover yesterday for you on Friday, was it? I gave you, after we've been just slaying Treasury bonds for the last year or so, long, short, long, short. This was we had a trade here. I gave you a total of 4 targets, shorted that breakdown there, hit the fourth and final target there. Then I turned around, said, let's run it the other way. I gave you 1, 2, 3, 4 targets. We hit that third target, at which point I removed on February 17th that final target. I figured we'd probably fall a little shy of that. And then I think it was just on Friday, I highlighted right here, and we were in this, I told you we have a bearish rising wedge, and that would likely be the catalyst for a drop. And we gapped down, went down, and treasuries are still below there. I'm staying away from treasuries right now, but I just want to point out that so far played out nice. And what you see, remember guys, one among many reasons, I trade futures primarily for the tax benefits that they have and the liquidity, but it's also the round the clock trading. So what you see in ETFs like TLT and QQQ, for example, and SPY today, you see these big gap downs that would appear untradeable, but they're not. Those are the futures are moving overnight, and so that's where if you're trading ZB, the drop was consistent, and you would have got in earlier and not had to chase a gap down. So just keep that in mind. So right now, little noise, because if the market does drop, you can get a flight to safety bid. I mean, there's just a lot going on. I'm not feeling treasuries right now. I just wanted to say that, but also point out that that was hit. And let me cover financials real quick and just wrap this up. I said I wouldn't make it a super long video because, again, there's not a lot new. I'm going through my watch list I have. It's queued up on another monitor. I have I call it financials related. It's various subsectors of financials, including the main financials, XLF. I'm just showing you where they're at. This sector, oops, I just toggle the list. Let me just sort by symbol here. We'll do it that way. BIZD, business development companies. They're back testing that 1297 low, which is this previous multi-year low right there. Back testing from a low. Still a lot of positive divergence. So, this market, I can tell you, it's pushing the edge. It's staring off the, staring into the abyss at the edge of a big cliff, but it hasn't fallen in yet. Fallen in means the S&P, QQQ and SPY. Remember, SPY, my next drop only has QQQ going down below the 200s, but to that second target on the daily chart, where SPY at that time would be coming in for about a test of the 200s. So, like I said, I can make a decent bull case here. So if things can turn around and these companies hold, what you want to look for As BDC, did these positive divergences start to pan out? The other day we were right here at 1297 last week in the video, and I said normally I would be buying BDC because it had positive divergence at that support major reaction low, just like we after we shorted it on a break of that trend line, covered it at T4, I bounced it long with giving you 3 targets, even though I removed that third target when the second was hit, only because I smelled that pullback coming, which happened. That would have stopped you out anyways. Then I said, they're short there. But as I said the other day, there's just too much right now in that sector. It's not, they may dodge a bullet, but it still may be the next shoe to drop. And so it did shoot under there quite a bit, fact. And a nice reversal so far. It dropped about 4%, and it's back testing from below now. So look, the more it goes up, and if it can take out this trend line, it's got a ways to go. That's going to be bullish, and that will have put in a big divergent low. So these are, again, things to watch. I don't think it's going to do that, but I'm not betting on it right now. I don't have a position in BIZD. BXK, that's the bank sector. Banks have broken down. You can see the bearish rising wedge. IAI, broker-dealer sector, they broke down to, again, it's this uptrend line, and the divergence line gives you a bearish rising wedge pattern. And we took out the 200-day moving averages, the blue and red line right here, and we're still trading below them. So that's bearish, right? A bearish posture as long as that remains there. Insurance in a trading range. That's IAK insurance ETF, insurance index ETF. IAT, regional banks, one of the two that I follow at support now. Told you I've been bearish on these guys for a while. Sell signal there. First targets hit yesterday and again today. Once that goes, that should open the door for these additional targets here. Brokers and exchanges, we haven't, that's IAI is the ETF used for that. This is just the one of the sectors I have for it. Credit services, we've already hit, Visa, told you, hit T5 recently, bounced back to T4, and Visa's at a lot of these things. That's why I'm doing a video, guys. I'm seeing a lot of things that, bouncing back into resistance. So if you are glass half empty, meaning bearish, and you covered Visa there because it's been a nice drop. This is where we first shorted it right here on June 9th at 365.30. We quickly hit my first 3 targets, went in a trading range, broke there. I said once that breaks, it would be a quick ride down to T4, and that's exactly what it was. Bounce from there. Then we took out the trading range. When I said when T4 was hit, we'd go to we'd go to T5, which we did. That's it. So we bounce back. Support once broken becomes resistance. So you have both the downtrend line and my former T4 support, which is now resistance. So you can short Visa here with a stop there. Now look, we've sheared most of the meat off the bone. This was and still is my final target. My degree of confidence isn't super high, but if hit, and again, what you would do is you would take it with, and don't give it too much room. You have the 200s up here. And look, Visa could fall a lot more. I'm just going to measure. If you short here on the kickback to T4 and we go down to T6, that's going to give you another 9% profit, especially if you've covered and gamed any of these bounces. On the weekly chart, when I turn all the lines, Visa has, and again, it meshes with my views with the stock market, a lot of downside left. This was a primary secular bull market uptrend line that comes off the 09 lows shortly after the stock came public here in 08. Well, zoom in here, and it's clearly been lost. We flirted with it there, a couple intra-week breaks, stick saves. Also lost those 200-day moving averages, which here on a weekly chart of 40-week simple and exponential move. So we're below the 40-week and 200-day moving averages. And this was my first support under the trend line, which was hit. Once it was broken here, hit, we're back testing. You can see we went down to my next target, and these weren't, after the fact targets. I created this back on January 30th, these weekly targets. And this is where I think this one goes. So once we break, we already hit 303 through 331. Once we break it, we come down here, 290.35. And again, because this is a secular bull market uptrend line, there's a good chance Visa has started, really since it peaked here, a new bear market. And if so, I would expect it to come at least down to this 254-ish level. That's going to give it a total drop off the highs of about 31, 32%. Okay, let me continue on and we will wrap this up, guys. KRE, regional banking sector ETF, breakdown, hit my first target, bounce back to the, give you objective short entry. Since took that out, coming up on the next target there, 64.16, 200-day moving averages. Once those go, this is at minimum where I think the minimum, again, where the regionals are coming down to. And that's about just under $58. That's going to be a drop in that sector, about 21, 22%, especially because they are, especially if there's more credit events to come in the private credit and the basically in the banking and lending sector. A lot of the same loans, same companies that are being lent to by private credit also have loans out by regional banks and some of the bigger banks too. Private equity, it was only a matter of time. You have private credit imploding, and these are a lot of the same companies like KKR and Blackstone. They have their hands in both cookie jars. So a lot of these private credit companies, they keep breaking down. They're at support. Like, for example, KKR, it's a great support level, but it also just recently took out this uptrend line. That uptrend line comes off the 2022 lows. So bottom line is, guys, I'm going to keep this very simple. Today we tested the lows on QQQ, the key support, the 200s. We also tested the midpoint of the trading of the SPY trading range. And here's KKR, and a lot of stocks hit good support levels today. There's a huge void on the volume at price histogram. You probably can't see it. That's these green and blue bars I have here. So I think if and when we take out today's lows, I'm talking the pre-market lows or around where the market opened, where the futures, and again, the bottom of the trading range in QQQ, it will probably, that will trigger the next sell signal. And that's, in my opinion, where we'll probably get a pretty quick waterfall type sell-off, a real sell-off that makes, if you thought, let's say you were too long today or you had a lot of shorts and you were happy, that's nothing. 3% move is peanuts. You're going to get 3% and you're going to get it the next day and the following day and the day after that. It probably drop, the market could easily drop 10% in a couple days. And if not more. Again, if that happens, it's all conditional stuff. So if it doesn't happen, then, you like I said, support until less broken. XLF, again, just undercut the recent low by a hair today. But again, they bought everything after the open. Remember, this is Pavlov's dogs, classical conditioning 101. I've been doing this for a long time, many decades, and I can't recall an environment where the dip buyer, it was so ingrained to buy the dip that almost anything, no matter how bad the news is, like I said, there's no way. And I'm welcome to hear it if somebody can spin how what's going on right now in the Middle East is anything but bullish. So here's crude oil. And again, if I could have probably just started and ended with this one chart. Now look, sooner or later there'll be an abatement. Like I said, Trump, or if they haven't done it yet, I've been away from my desk most of the day. Open up the strategic petroleum reserves, do that, whatever they can do. Obviously, they're going to start, turning on more pumps out in West Texas, all that. But it takes a while to get a lot of those wells back online. So all I can tell you is even before Iran, right? We were pushing, crude was in a clear trajectory and hitting into my orange zone. So the only way this market holds up and goes to new highs is if crude, in my humble opinion, is if crude really falls back down and gets down towards, this is where USO has been trading in recent years. This goes back to 2022. And it's an ETN, doesn't do a perfect job, does an okay job tracking crude. You can look at crude futures too. But this is a big factor. And so as long as I see this, crude continuing to go up, sell the rips. That's what I said yesterday. Short rallies into resistance. You've got that now. Let me get to QQQ and I'll wrap this video up. I keep telling you I'll do it. You know me, get me talking about the charts, I won't shut up. So that's it. So you have, that's where we shorted yesterday. These were the 3 lines I drew. Anything much below that takes you down below the, the trading range on the multi-month trading range on the daily charts. So we tested it today. Pavlov's dogs do what they do when the dinner bell rings. They salivate, they come in, they buy the dips, they're conditioned, and that works until it doesn't work. That's one of my yogiisms that I came up with years ago in the market. Something works until it doesn't, right? And when it stops working, and what happens, it's what I call, the other term I've made up, the point of recognition, that if and when we get this, a big red nasty candle, especially in a week, quick move down there, that's what I call the WTF or PR moment for the bulls. You all know what WTF means, shorthand, and a point of recognition where they've been buying, dutifully buying the dips, like Kramer or all those folks on CNBC tell them, buy the dips, it doesn't matter. And this is where what happens, they realize it's no longer working. They're already frustrated because they've been buying the dips for months now, and they go up a little and then they come back down. But this is where the stops are right there. And this is where psychology starts to kick in, where people realize, screw this, I'm out of here. And so that's where you'll start to see some capitulation. And remember, we could blow on down through T2. It's the next target that was laid out all the way back here when we shorted back here. My weekly targets, I still maintain. And this is that same comparable level right there. Here's the trading range. And so these are your current targets. Like I said the other day, I need to move up T3 to about right here. But let's, just kind of give you an idea of where we go. And what happens is there comes a point of acceleration again. Once you break out of that trading range, it could be a very quick move. You can see how quick it was there. You can see the first leg down, second wave up. This was a nice, 5-wave Elliott wave count. P3, the most powerful wave, 4 up, 5 down. That was a nice 5-wave primary trend there. And so you get that. Probably wave 1, maybe wave 1 comes here or there, bounce. Wave 1 down, 2 up, and then 3 down, probably look like that. Then that would be from where we're at today. That's a drop of about 30%. And if so, again, guys, all conditional. Remember, everything's conditional. And first, breaking down. And if that happens, it's going to take us up to my higher targets on the VIX, which is, again, now at this point, we already hit this 2662 target today. So we pop that. It's going to coincide with QQQ and SPY taking out today's lows, most likely, right? And it's going to take us through here. This is just a minor, really more of a minor resistance level. I think we'll shoot right up there. And so that's that. Lots of meat on that bone right there if that happens. And guys, if it doesn't, or if we get another pullback to the uptrend line, it's worked so far. But remember, the VIX wakes up. When she starts to wake up, I've been telling you lately, I keep saying the VIX has woken up. She only do this for a little while, and then she starts going crazy. Sometimes it's just these little spikes and everything normalizes, but sometimes you get those early tremors, like here was one, or you get this, and then the big explosion comes. There's a good example. We woke up, a couple big spikes, boom, boom, to the same level right here, pulled back. Everyone thought the worst was over in the stock market, and then boom, right there. So bottom line is you got to move fast. You got to move fast either way, because sometime when the VIX is done rallying, if it figures and the market wants to hold up and rally from here, she falls just as fast as she goes up. All right, so remember that. And to trade the VIX, the only way to do it successfully is correlate it with the stock market, the same levels I told you to watch. SPY, QQQ. Again, I know it tracks SPY, but what QQQ does affects SPY, so you're going to watch them together. Okay, I will end the video here. This has been Randy Finney with Right Side of the Chart. Have a great day.